Good morning to all traders and welcome to this week's last daily markets watch provided to you by AmaGuyFX. This is Stavros Lysios, of course, and it is the 10th of December today, an interesting close for the week. We are expecting the CPI figures in the US and it seems like markets expect the CPI to be high. And that is because we are seeing, again, dollar strengthening and at the same time risk declining. And this is, of course, because there is a lot of restrictions, a lot of concerns around demand for oil, given the latest on Omicron. With that said, euro declined, gold declined, and oil declined. And as I said, seems to suggest that inflation is going to be high, and that is going to support the Fed's narrative to increase interest rates. So let's have a look quickly on the euro dollar, gold, and prices of oil. We talked about euro dollar the other day, and we did say indeed that if we manage to stay within this channel, this is going to look more bullish than bearish. Although initially that was the case after the bounce over here around 112.60 or so, we've had a fresh low, which suggests that there is more appetite for downside, and the attempt to the upside has not been effective enough to lead to fresh highs, which means now the pressure remains to the downside. And that is also especially true since we remain below 113, which is a very big psychological well, it was a support and it just became a resistance, which is actually called a polarity. Now, a change in the polarity could mean that there is further downside potential, unless if, and let me just go down on the 1 hour, unless if we are going to see prices making an attempt to break 113.16. Okay. But the sentiment remains bearish as long as we're below 113.16, as long as below 113. And should we manage to do a low below 112.60 or so, then that is going to be mainly detrimental. The only case I see potential move to the upside here is if we manage to get something like some sort of head and shoulders here, okay? But it's not right at the bottom to be a good inverse head and shoulders. What it could be though is the longer term one, because if we look at this over here, then that would be perhaps the left shoulder, the head, the right shoulder, and potentially that can lead to further upside. Okay, so we'll be really paying close attention to the levels to the upside and how prices are, in case we do see an upside, of course, are going to react around previous swing levels. But for now, the bias remains to the downside. Prices of gold have broken also outside this ascending channel that we've drawn a few weeks ago. And this turns a little bit more bearish to what we would have hoped. Not only did we break out, I mean, we did break outside this channel before. That was seen as a false break. Now there is a second attempt, okay? If we do manage to break that level over here, very likely to hit to 1755, then the potential to move down at 1722 also is going to increase. Okay, we do see some sort of bearish hidden divergence here as well. Okay, and this is pushing the prices to the downside to the effect where we see the 50% of this upside leg breaking. Now, sentiment also is bearish here, as you can understand. As long as we're below 50, that is biased to the downside rather than to the upside. Okay. Now, opposite to the euro dollar, I'm looking at this as a potential, or even this, like shoulder. Okay, so it would have one big one over here. which means we're going to go down there and see something like this, and then further downside, of course. But it means we're going to stay here for a while. Or we could see this being something like head and shoulders, which means after this downside, the upside is going to very likely take us higher rather than lower, which means the second larger trend head and shoulders is going to fail. Okay, now this is medium term. I would even go closer to medium to long, but looking at this chart over here, it's not looking good. Okay, it's not looking good because we've had quite a few signals here that indicated and still do that there is further downside. The RSI is very near reaching an overbought level, an oversold level, but there is no signal here to suggest over here that could continue higher. What we do see is we see potential divergence over here. Okay, but if we do go down to 1760, which is very possible, then we're going to lose that divergence over here, and that is going to turn more bearish. Okay, so since we are looking at a potential downside over here, I'm going to use the channel once again, and this time I'm going to have to, well, look at this top and that 4, and then go all the way down here. And what we're going to have to do is well, actually, to be fair, that should be around 1 and 2, and then we would have something like that. So there is a lot of downside here, but the idea is this: as long as we are below this trend line, this is remained biased to the downside. Okay, and you do know as well that we can have a smaller shorter term channel up ascending one over here as well, which seems now that is just broken anyway. So gotta be a bit careful on, you know, on how prices react around the level that we currently are, because we are seeing some sort of rejection here. So if we lose that level, which is probably just about over here, the 1770, then the probabilities of further downside are going to increase. Now, oil also moved lower. We did see a very nice bullish move to the upside and looking progressive as well. We did highlight the 38 over here from top to bottom. Okay, we did highlight the 23 and the 50. The attempt to the upside didn't manage to get up to 50. Okay, and then of course prices fell, which means bears didn't want bulls to get close to 50. Okay, so this is bearish. It looks bearish for now. Okay, which means this could be indeed a progressive move to the downside. We might go back to 62 and even lower. Okay, that's what it means. But not all is lost, because it's obviously still too early to look at the potential move to the downside. But what we can do, okay, since we're looking at this move to the downside, now we can look at it to the upside. We can have a look at 69 and of course the 67.70. Now this is going to be our bias. Okay, so as long as we're above that level for now, we remain biased to the upside, because we do have a potential progressive move to the upside. Okay, that could and will actually be invalidated even at 69, because this is the first top, the first swing before the correction. Okay, so 69 is a very important level, and we also expect the EIA today. We'll have to see what the EIA results show for the weekly stocks. Now, what I am also noticing is the fact that over here we do have a bullish crush, a bullish rather than anything else. Okay, it seems like also the oversold area over here has given us a good boost all the way up to the 50 RSI, but we do need to get over 50 for a potential trend change over here and potential move to the upside. Now, breaking the previous high at 73, we'll still have a stumbling block at 74.50, which is this low over here. And if we do break above that level, then the situation to the upside is going to improve because it will invalidate progress to the downside. Okay, by progress I mean no interaction between waves, which means okay, there's higher likelihood to move higher up. Okay, now down on the 1 hour, okay, here's what we're looking. We're gonna get our channel again. There's two ways of since we did that. I'm not sure how I'm gonna make this, but I will try. We're looking at the tops now, connecting the tops, and you see, and the level that we're looking here is, you know, potential move to the upside. If we are stopped at this level, or if we're stopped at this level at some point, there will be higher risk to move lower down. Okay, this is the short to medium term, but in the shorter term, we can do that to the downside. And since we do have one level so far over here, and this is our first low, well, the only solution is this. And you can see we're already outside this, which means that has to be, you know, we need to just draw a trend line here, okay, that is connecting that recent high now, okay, or it could connect. We're pretty much connecting this, the level over here and these two levels to get this trend line. So we can put a resistance for the daily top at around 71.30, 71.60, since there seems to be a potential attempt up to 50 and a potential cross in the 1 hour. But if we don't manage to get over this trend line, then there is higher likelihood that we're going to get down to 69 rather than moving higher, which, by the way, as I showed you before, it's a very important level. It's also the 38 Fibonacci retracement, and it will increase the chances of going down to 67.70, which is the sentiment sort of level. And in case we do break that, then we're going to turn further bearish. Okay, so guys, this will be all for this week. Thank you very much for watching, and we will be here again next Monday. Take care, trade safe, and enjoy your weekend.